When the pandemic hit 2 years ago, the federal government implemented several economic measures that led to historically low mortgage rates. And when the lockdown started and employees began working from home, it created a greater desire for people to have their own space, especially since they weren't tied to a commute anymore. A software engineer in San Francisco could keep their high-paying job, and instead of trying to buy a house in the Bay Area, which is the most expensive real estate market in the entire United States, they could live anywhere in the country. All of this contributed to a home buying frenzy across the nation, where it seemed like everybody wanted to buy a house. And then, right in the middle of this huge surge in buyer demand, builders began experiencing supply chain issues and rising costs. There were way more buyers than available homes, and all these buyers started bidding against each other, driving home prices higher and higher, and creating one of the tightest housing markets that anyone has ever seen. But fast forward to today, when it looks like the pandemic is finally behind us, what does the real estate market look like now? And more importantly, what can we expect to happen next? Well, stick around for this video, and I'll tell you why a huge percentage of people who bought houses during the pandemic are now feeling buyer remorse, and why that could contribute to falling home prices as we move forward. There was a survey done earlier this year of home buyers who had purchased a home during the pandemic, and 75% of them regretted their purchase. Why? Because they felt like they didn't have enough time to weigh their priorities and their options. Top reasons included realizing they had chosen the wrong location, unexpected issues that were missed because they skipped a home inspection, they had too long of a commute, or they rushed into a purchase because they thought they were going to miss out on something. Today, many of these same home buyers feel cheated. They are beginning to realize that they might have overpaid for the houses they bought, or they didn't get their money's worth. Now remember, if they hadn't been willing to pay more than the list price, they probably wouldn't have been able to buy a house. But today, as they reflect back on their decisions during this pandemic buying frenzy, they're questioning whether they made the best decision. In their minds, the crazy market and steep competition put too much pressure on them to buy a house, any house, at exorbitant prices, when they should have taken the time to make a more measured decision and find the right home for them. Many of them experience what a lot of stock traders call the fear of missing out. Now that so many of them are realizing that the pressure cooker environment literally made them go crazy, is it possible that we are now entering a stage where these inflated home prices will finally begin to come down? The phrase, "what goes up must come down," might be true in stocks and IPOs, but it hasn't materialized in the housing market, despite what common sense would have predicted. We had the pandemic, the lockdowns, harsh economic conditions, unemployment, inflation, soaring interest rates, but housing prices continue to go up. But these survey results from the homeowners who purchased during the pandemic suggest that things might be changing. But the million-dollar question is, will the housing market begin to stabilize? The most obvious link between the housing market buying frenzy and falling prices is the reduction in potential buyers. All those people who bought during the pandemic are no longer in the market and have stopped looking. This means there should be fewer people searching for homes, and at some point, demand could return to a normal level. If that happened, prices would either stabilize or begin to decline. Now, the number of buyers could also decline for other reasons. Real estate investors might become more reluctant to get involved in the market with the current uncertainty. Have you talked to anyone who owns a rental property in the Austin area after they received their tax appraisal this year? There are a lot of investors questioning whether Austin is still a good market to invest in. Now, in addition to this, inflation and the cost of living is straining household budgets. When you combine this with soaring mortgage rates, it's becoming increasingly more difficult for first-time home buyers to even enter the market. But even with all this, it's still unclear whether it would be enough to send prices lower when you consider the low housing supply that we still face. Consider this. Why did people rush to buy houses during the pandemic in the first place? Now, yes, there were optimal conditions, including the low mortgage rates, but people desired their own space. Before the pandemic, the boom was in the urban areas, but the lockdowns forced those people into cramped spaces with limited access to public areas. That changed their preferences and motivated them to get out of the city. As a result, demand and prices for bigger homes in the suburbs and rural areas increased. And fixer-uppers also saw a surge in popularity. But now everything is opening back up again. What if buyer preferences shift back to where they were before, especially if jobs bring people back into the city? What would it look like if demand and high prices return to the urban areas, while lower demand in the suburbs and rural areas caused prices to decrease? Here's another question for you. With all those people who are disappointed with the homes they purchased during the pandemic, are they going to stay where they're at? Or could they begin searching for a house that they're not going to regret this time? Now, in order to answer that question, we need to talk a little bit about buyer burnout. You know, even with masks and social distancing, during the height of the pandemic home buying frenzy, buyers made multiple offers. They waived contingencies. They paid the seller's closing costs. Basically, they did anything and everything they could to make their offer more attractive. And the dollar amount of those offers escalated. And people paid substantially more than the list price for homes that they weren't 100% comfortable with, simply out of desperation to buy something. I mean, it's no wonder they're not thrilled about going through all that again. Even those who weren't directly involved in all that madness might be reluctant to enter the market when they hear all the regrets from the people who had gone through it before. Now, we can't accurately discuss real estate conditions and the possibility of falling prices without acknowledging what's currently happening in the housing market and in the overall economy. Mortgage rates are rising, the cost of living is increasing, and uncertainty is growing. All this means that conditions are no longer optimal to buy a house. Let's assume that demand has already been reduced because of all those unhappy homeowners who are too burned out to look for another property. In addition to that, demand will continue to fall because there is another large group of people who might be interested in buying but can no longer afford to. And in addition to all this, the unpredictability of what's going to happen next could discourage other potential buyers who might otherwise have been willing to buy a house. These truly are unprecedented times. We can't look back at history for clues as to what might happen next because nothing like this has ever happened before. The best term to describe the real estate market over the last couple of years is crazy. In many cases, it defies logic. Can we really expect that what happens next will be any less unpredictable? My advice is keep it simple and try to separate your real estate decisions from the state of the market. Here's what I mean by that. Your need to buy or sell a home is based on some type of life event. Your family's getting bigger, or your family's getting smaller. You just got a new job, or you just retired from the place you worked at for the last 30 years. Something is happening in your life, or will be happening soon, that's creating the need to buy or sell a house. That life event is going to happen no matter what's going on in the economy or in the housing market. Now, granted, there are certain periods where the market favors the seller, but there are also periods where the market favors the buyer. And remember this, even if you're able to sell your house at the height of the seller's market, you're going to have to buy your next house in that same seller's market. Instead of trying to time the market or anticipate what's going to happen next, maybe a better question is to ask, what's your motivation to buy or sell? Are you just testing the market, or is there a life event that's creating an immediate need? People buy real estate in the booms and the busts, and very rarely do people make decisions on their primary residence based solely on market conditions or whether it's the ideal long-term investment. They buy a house because it meets their needs and they're able to afford it. And they sell when they can get enough money to pay off their existing mortgage and do whatever it is they're planning to do next. If you're still undecided, remember this. The best time to buy real estate is always 10 years ago. But the second best time is right now. You know, I get emails, texts, and phone calls almost every day from people who are thinking about buying or selling real estate here in the Austin area, and I would love to help you out too. If you like this video, you should check out this other one that I did. And don't forget to subscribe to my channel and hit that notification bell. All of my contact information is in the video description, so don't be shy. Let's make your real estate dreams come true.